that perception also doesn't exist. Perhaps the most important thing I declined to mention was the fact that we have a stable government. And political stability, to my mind, is worth a tremendous amount as far as the external situation goes, and that is a big change. Now, in terms of what risks, well, I will tell you that nobody in the world knows what will happen when the interest rate cycle changes, because there's been so much money flowing on the basis of interest differentials that are anticipated to stay that way for a long time. When the perception of interest differentials change and money starts flowing back, who is, in Warren Buffett's inimical phrase, who is swimming naked, we'll find out then. But for sure, I don't anticipate that it'll be us.
Okay, Mayur?
So this is Mayur from the Times of India. So you've taken a number of measures to promote the long-term bond market for infrastructure. In this context, wanted to know whether you feel there's a need to recalibrate the yield curve to make it more attractive for long-term investors, sort of steepen the curve a bit.
The question is suggesting I have a wand where I sort of move it up and move it down. Look, what we can do is really create a macro environment which is comfortable to all investors. And I see at the long end, perhaps the most important things we can work on is improving liquidity in the bond markets, as well as bringing down perceptions of inflation. Both those things are the things we can work on. At the short end, smoothing out liquidity is important, and building out the curve at the short end is also important. We're working on all these things. If you look at the moves today, for example, reducing HTM, people say, why do it? Well, it will improve liquidity in the markets, in the bond markets, because banks will trade a little more. That will improve liquidity. That's a good thing. So when we take decisions, we're not looking at the immediate effect on any market. We're not trying to see whether we get the vote of approval from the Sensex or from the GSEC market. We're thinking about the medium to long term. How is this going to play out? Is it going to strengthen these markets? And that's precisely why the decisions we took today were taken.
Can we quickly check if there is a question outside, Inba?
Sure, ma'am. Ladies and gentlemen, connected to the audio bridge, if you wish to ask a question, you may press star and 1 on your touchtone telephone. Our first question is from Manju of DNA. Please go ahead.
Good morning, Governor.
Morning.
The global financial markets are exuberant and US is moving towards a higher interest rate. The quantitative easing is also on course and is expected to end by October. What do you think would be the impact on the Indian market? And also your outlook on NPAs and credit growth for the banking system?
So, sort of a version of a question I addressed, but let me see if I can say it another way. When interest rates start turning, I do expect that people will revisit all their investment allocations and try and figure out where they want to pull out from. I would hope at that time they would see enough signs in the Indian economy to understand that it probably is one of the better places to put your money at that point, and that we should not see as big a change here as some other places might see. But I don't think we can, as I said, nobody really knows how the money will behave, because some of it is based on short-term calculations and not necessarily on longer-term fundamentals. We have tried to immunize ourselves to that by pushing some of the money towards the longer end, but I do suspect that volatility, at least initially, will be widespread. But as people sit down and take a more balanced view, I hope they will see these differences. So over and above some volatility, I don't see a longer-term effect, given the many things that are happening in this economy relative to some of the things that are happening elsewhere.
Outlook on credit and NPAs?
Credit and?
NPAs.
Yeah, NPAs.
NPAs we are working very hard on tackling over the next few days, I hope we will be able to announce some measures on ARC's asset reconstruction companies. I think the idea is broadly to ensure that financial assets are dealt with in a way to ensure the maximum value for the underlying real assets, and to put the economy back on track in terms of growth. So, if there are distressed assets, can we bring in new equity? If there is a restructuring that is needed, will the banks do that quickly? If there are assets to be sold, can that be done speedily? Time often is the most important thing. The longer you wait, the more distressed the asset becomes. In an environment where we see growth picking up, I think if we can deal with some of these problems and put these assets back on track quickly, they will add to growth, and the overall losses to the system will be substantially diminished relative to where they are now. So our main effort is to try and get movement on all these sides and to prevent, in some sense, parking or neglect of these assets. And I think the bankers tell us that some of our measures since April, the large loan database, the move towards joint lending fora, are starting to work. There are some teething issues which we are dealing with, but it is picking up. So I'm hopeful that all these measures, together with growth is going to be the thing that lifts a lot of ships. Together with the tide of growth, I'm hopeful that the NPA problem will be diminished over time.
Okay, last question from this room, Govardhan.
So good afternoon, Govardhan from Economic Times. Taking that 6% is the new target that we have to look
It's
at.
not a new target. It's always been the target.
Okay, so that is the new one that we have to. And you mentioned about the government creating a congenial setting for steady improvement. And then you also mentioned that consumer and business confidence pick up, aggregate demand will also strengthen, and the Reserve Bank will act as necessary. So that is that you are forecasting a kind of inflation to perk up if the demand picks up. Does that mean that the conventional down cycle is not going to happen as it being expected because of these factors?
No.
Interest rates.
I don't think one should make too many assumptions. I think what we're saying is that, remember, our whole path has to play out. It's 8% at the end of this year, 6% at the end of next year. We're confident we can get to 8, and we are at the current setting. We are also confident we can get to 6. Now, how the setting changes over time, we're saying depends on developments. If inflation comes down faster than we anticipate, the language we used in the last statement still holds. If it goes up faster than we anticipate, the language we used in the last statement still holds. So in a sense, I think all we're saying is there is a path which is not just the 8 next year, but the 6 after that. Both are part of our program.
And then you mentioned about the current account deficit improving after the relaxation on the import of gold. So the gold imports have shot up. Isn't it a worrying factor when it comes to the current account deficit numbers for the full year?
Yes, I mean, our intent is, and I don't think the government's intent is to sit on these special measures forever. But let us see, as the economy improves, as exports improve, that will create room for unwinding these measures more. I'm not overly worried about the blip up in imports of gold, but we're watching that to see how that moves.
On Andhra Pradesh. So on Andhra Pradesh, I believe the RBI had asked for the yield data, and I think the debt waiver kicks in if the yields are less than half of the average. So just wanted a status update, because going back and forth and we're not sure what exactly, because they have their version, the government there. So what is the status on Andhra Pradesh?
I think the issue, as you well know, is that certain election promises were made both in Andhra Pradesh and Telangana. Now, there is a RBI master circular which allows a certain category of loans to be restructured if a area is subject to catastrophic weather or other sources of damage which hurt production. And typically, a rule of thumb has been that in such situations, if yields are anticipated to fall below 50%, the collector can declare a state of emergency, which also triggers, according to the Master Circular, the possibility of loan restructuring. Of course, loan restructuring is completely at the voluntary it's completely voluntary for the banks, but in such situations we afford that restructuring better regulatory treatment. They're not treated as NPAs. Now, what has happened in Andhra Pradesh and Telangana is, because of a variety of factors, no such emergency was declared. No request for this restructuring was made, and subsequent to that, we've had the full harvest come in. So, unlike the typical situation where the cyclone Phelan hits, nobody knows what the extent of damage is. You have to act quickly. In this situation, we have the harvest after Phelan also. And so we've asked for those numbers. We're looking at those numbers. Prima facie, the sort of 50% criteria doesn't look like it's being met by any of the districts. Now, that's not a hard and fast rule, but it is a rule of thumb that we have used, or that's in the Master Circular. So we're in discussion with the government to say, where exactly is the distress, so that we can take a more reasoned and focused view. It doesn't appear to be that from the production data that the cyclone had widespread damage. This is not to say there may not be localized damage, which we're not picking up, but we need the government to tell us how a more focused assessment can be made.
But farmers are already not paying back. Andhra Bank reported a threefold increase in agri-back loans. So, I mean, there is a problem.
We have been quite categorical about the dangers of talking about waivers, about putting the idea of waivers, because it creates the possibility that anticipating such waivers, both the beneficiaries, the ultimate potential beneficiaries, as well as everybody else who thinks there's a chance they might benefit, stop paying for fear that they will not benefit when the time comes. We have some assurances that whatever ultimate scheme is devised will not reward just the non-payers. That there will be a scheme which doesn't encourage moral hazard. But right now there is no sort of scheme on the table. I think there are statements, there are discussions, but nothing really has been concretized.
Thank you very much, sir. Thank you all, and apologies for those who couldn't ask.